कभी तो आएगी.
Poverty cannot be fought without growth. You absolutely 100% need growth to fight poverty. There is absolutely no confusion in my mind about this.
दुनिया में अविश्वास पैदा हुआ है हमारी ये कंसिस्टेंसी के अभाव के कारण, और विश्व व्यापार के अंदर किसी भी देश के लिए उसकी एक्सपोर्ट की पॉलिसी में कंसिस्टेंसी होना बहुत जरूरी है.
We have a system that's completely gummed up. Hundreds of projects are stalled. This is not a question of policy or reforms. This is a question of just getting it done.
Our confidence levels are very low right now. All investment depends upon expected profits, not current profits, not past profits. So it's a game of expectations.
अगर मैन्युफैक्चरिंग प्रोसेस को एफिशिएंटली करना, सस्ते में होना, ये अगर हम प्लेटफॉर्म क्रिएट करते हैं तो दुनिया में मंदी के दौर होने के बाद भी लोग हमारी तरफ आएंगे.
We believe in inclusive government. We believe in liberalization. We believe in opening up business. But we also believe that every single Indian has to be part of the progress in this country.
It is the job of the policymakers, and Prime Minister is the chief policymaker who has to give signals not only to the domestic investors but also to foreign investors that look, in India we are on the path of economic reforms.
India would become a lot more investment friendly just through sheer monitoring of projects and of implementation.
Hello and welcome to Change India, an agenda for the next Prime Minister. Today in the fourth show of our series, we have 10 policy initiatives that will enable the next Prime Minister to revive investment, so crucial for reigniting India's growth story. These have been culled from recommendations made by a group of experts, and you can get all the details from our website thinkindia.in.com. Joining us in the studio are four of these distinguished contributors. We have Bibek Debroy, eminent economist who is professor at the Center for Policy Research; Shankkar Aiyar, journalist and author; Saugata Bhattacharya, senior vice president and chief economist of Axis Bank; and joining us on a satellite link from Mumbai is Manish Chokhani, an eminent banker and one of India's best known investors. And with them is our very own Dheeraj Nair, who has anchored this project for Think India. We also have an audience in the studio, among whom are some people who have actively pitched into the debate on Twitter and on our website. I would urge all of you to contribute to future editions on Twitter and our website, and we would be delighted to invite you to participate in the upcoming shows. So let's get on with the first point on our agenda of action for the Prime Minister, and this one is a bit generic, which says that we must reduce the fiscal deficit and revenue deficit by 0.5 percentage points every year. Now, do recall that early in the decade, we had a Fiscal Responsibility and Budget Management Act, which made it a legal commitment on the part of the government to maintain its fiscal deficit at a particular level. That was abandoned. What we are saying is bring that back, and we are also saying that, like you have done with diesel, like you are trying to chip away, you must have a program over 3 years where you can chip away at every non-merit subsidy, cut it by 1 percentage point to 3 percentage points every month, and get it down to the optimal level. These are the two recommendations we are making. Let me begin with Bibek.
Are you asking me whether these targets are achievable?
That's right. And how?
Yes, they are achievable. They are not necessarily achievable in 2014-15. They need to be made achievable over a slightly medium term. Personally, I think you can actually reduce the fiscal deficit by 0.5%. I suspect the revenue deficit reduction would be of the order of 0.4. I don't really see 0.5 happening, but that's nitty-gritty. But remember one thing, that 2014-15 will carry over a lot of the expenditure that's going to be postponed from this fiscal year. So
Right.
it's going to be very difficult in 14-15.
Which is why we have said we've actually laid out a 36-month program. We are saying over 36 months, if you start chipping away like you've started doing in diesel, you can possibly reach the point.
Yes.
Shankkar?
Right. No, the first order of the day is the government should give up this whole idea of outlays is equal to outcome, that spend is equal to results mentality. In trying to fix entitlements for a whole range of population, they gave up the first entitlement, which is budget responsibility, fiscal management.
So you say we should get FRBM back?
We should get FRBM back. This government, when it came to power in 2004, was borrowing 200 crores per day. Now it's borrowing 1600 crores per day. Obviously, this is just not sustainable. So they have to, first order would be to retire some of the debt. And in the first year, when they have the mass mandate behind them, the government should retire some debt by doing major disinvestment,
Yes.
major programs.
Shankkar, we'll come to that on how to get this chip away done. Let me toss to Manish. Do you think these are sensible suggestions and doable? And if yes, how?
Well, Raghav, no one can quibble with a government or a company saying that you must cut your losses. The fact is we pay half of our revenue income every year by way of interest. So there's no way that you can continue running a company or indeed a country on this basis. So one can't argue with this, that one has to get the fiscal deficit down, especially on the revenue side.
Right. Saugata, you agree with our recommendations? Doable?
Doable. I think it's very, very doable, and we are already seeing the movement on diesel, which was a difficult decision, and the government has to be recommended for that. I think in a country like ours, where with so many people below living at fairly subsistence levels, I think some subsidies have to be given, because otherwise, I mean, that goes on. I mean, it's not part of the debate.
Yes, and I don't think exactly that's not part of the debate.
But delivery mechanisms, and we are moving towards that. Fortunately, I think major progress has been achieved in terms of subsidy delivery. And the thing that we don't realize that, of course, I mean, our tax base is very low. I'm not recommending higher tax rates, but I mean, tax coverage in India needs to be improved, and I think that can be done with data systems, analytics, and things. I think tax revenues can be.
This really in the first budget of the new Prime Minister, these two things can come in. Bring in the FRBM and set a target to get things down to a particular level.
Yes.
Dheeraj, I just want to bring you in on the point that has been made on diesel. It's always surprised me that diesel has been such a successful move. That was the government in a sense timid about not doing it even more aggressively?
Absolutely, Raghav, and you again see signs of timidity now because they reduced the quota of LPG cylinders which you get on subsidy, and now there's before elections you want to raise it again. So I mean, this is the standard populism of Indian politics, which all parties and all leaders fall prey to at some point or the other. So I think the only time where you can do tough reform is
year one, year two.
Yeah. So if you don't do it, if you miss the bus in that first budget,
right,
I don't think you're going to have it done. So the first budget is very, very crucial.
So really, we've scripted the headline for the new Prime Minister as far as his first budget coming in July of 2014 will be: bring in FRBM and bring a calibrated program of cutting non-merit subsidies down by about 1% to 3 percentage points every month for 36 months. I'll get on to point 2. And point 2 is another one of those points which has been hanging over our heads for the past several years. And this is really a simple one again. Implement the goods and services tax immediately. And here we understand that several years have gone in trying to get it done. And the big stumbling point here is the states feel that their revenues will be compromised or reduced. So we are suggesting, rather than keep this open forever, you give a guarantee to the states that their current revenues will be protected. And then using that as the springboard, bring the GST over the next couple of years also if you have to, but get started. Bibek.
Two quick reactions. Firstly, the fact that we have not been able to do it so far is indicative of the fact that the centre has not been able to manage discussions with the states. And this will continue to be important for the new government. The original VAT also involved this consultation, so we need to revive that consultative process and make it credible.
Right.
The second point is, yes, the states fear revenue losses, much of it is perception and is not real, and the way to do it is, as has been done in the past, is to use the Finance Commission to, within quotes, guarantee that
That's right. If you guarantee them, then I see a lot of the problems going away. Manish, coming to you, rather than have this thing of we must get it right on day one, can we now start by giving the guarantee and then rolling forward and getting it right over the next couple of years, maybe?
Absolutely, Raghav. Can't quibble with that either. As far as the markets are concerned, we just want it done. And there is a phrase in Hindi where the badakpan of the elder of the house has to come out. And I would go even further and say, why just guarantee? If we think this will add 1-2 percentage points to GDP, I would even assure the stage that we will actually ensure that you get 5 or 10% growth in your revenues.
So that's the bullish investor in talking in you, Manish. Give them a little bit more. Dheeraj, there was talk in the last budget, not the last budget, but 2 or 3 budgets ago when I think Finance Minister Pranab Mukherjee had actually laid out a number where he said he would use that to make up if there is a shortfall. Whatever happened?
Raghav, it's got stuck in the politics of the ruling party versus opposition and various other things and perceptions of revenue loss. But I think the main point is that you don't set the rates too high, because that will again discourage compliance, which is a very important thing. In India, we need lower rates and higher compliance. And then just give a grand bargain. I think the centre has enough money. You make an offer to states they cannot refuse. And the centre can do that, the new Prime Minister can do that.
Right. Okay, I'll take a very quick poll from the audience. On, do you think the new Prime Minister will be able to break the logjam and get this GST done? How many of you feel that will happen? Okay, I would say 60%. So about 60% say he can do it, 40% still hold on to their skepticism. So, Mr. Prime Minister, you've still got quite a few things to overcome. We'll take a break at this stage. You get onto our website, thinkindia.in.com, contribute and stay right there. We'll be back. Welcome back to Change India, an agenda for the next Prime Minister. Today we are talking about how to revive India's investment and growth story. And we've got point number 4 here. This is something that has rankled a lot of people. A lot of our laws have been changing, flip-flop, retrospective changes, retroactive changes. We are saying the new Prime Minister should come in and issue a pledge that in low and stable taxation and the rule of law, we believe. I will give you the example of the Vodafone tax case, where actually the government lost the case all the way in the Supreme Court, but then changed the law to bring Vodafone back into the tax ambit. And that has damaged India's reputation for fair play and fair taxation all across the world. Let me begin this time with Manish in Mumbai. Manish, your suggestion.
You know, Raghav, this is the single most important point, I think, from an Indian industrialist's viewpoint, that I think in a sense we've gone back to the license permit Raj, where you run door to door to get permissions in India. The law can change 2 years after you've started making investments. The taxation can change, and the minutiae of the law has become so much detailed that we are generating PhDs inside companies to try and keep up with what's going on. And frankly, if that, you were to pick one thing which breaks confidence of someone who's going to go and make investments, it would be this. So I would even go beyond saying, other than stable laws and low taxation, I think simpler laws which a common businessman can understand.
Right.
And a rule book which cannot be running into 500 pages, but which should be 20, 30 pages, has to become directionally the way we want to go in this country.
Right. So let me, Shankkar, your thoughts here, and then we'll move on to the next point.
Very simply, predictability is essential to life and to business. I mean, you can't come in to play on a field and the rules of the game change in the middle. And the government has to issue a pledge now, because you have violated the trust of so many investors. And governments must recognize that companies who invest in India are not one-person companies. They are conglomerates where huge number of investor funds are there, and they carry the good news and the bad news, and currently they're carrying the bad news.
Right. So issue a pledge. We are saying this is a commitment the Prime Minister should make on the floor of the House in his very first outing in Parliament. I'll move on to point 2 here, which is privatize public sector undertakings. Privatize. Remember, this used to happen about 10 years ago, and remember the companies which were privatized. You had VSNL, you had Balco, you even had Maruti, and all those companies are doing very well. But privatization stopped in the last 10 years. And we are saying that the proceeds that you raise from privatization, you please use for public investment. We envisage there'll be one big problem in privatization, that is labor unions will oppose it. We are saying give a very generous VRS, treat it as a cost of privatization, but then get it done. Saugata.
Sure. I mean, I completely agree with you that this is the same principle as the GST.
Right.
So if you think that you can increase your productivity X times, I mean, you can shave off a little bit of that for a VRS and just ensure that the company becomes more competitive and so on. And actual privatization, not disinvestment, as you mentioned in the beginning.
Right.
Because mere revenue generation, revenue maximization is not the goal. Efficiency is.
Right. Bibek?
I completely agree, except let me put in one other caveat. The other reservation is not going to be from the unions, is going to be an argument that the timing is not right because the market is not in very good shape. I also quickly need to point out that at the moment, since we are talking about the government in Delhi, we are talking about the central PSUs, but there are several others at the state level which we are not talking about.
That's right.
On the central PSUs, there was a decision that was once upon taken that the funds that you get from privatization oblique disinvestment are not going to go into the consolidated fund, but are going to go into a separate national investment fund,
Yes.
Which was never implemented. So there is a question of a political economy of selling it, and that's primarily in terms of the opportunity costs of those resources which might have been spent elsewhere, but today are being squandered in terms of losses. But I think it's doable.
Yeah. So one quick, since you look at these issues, you look at labor issues as well. The suggestion that we've made that for companies which are being privatized, you ensure that the existing labor continues to get exactly the same benefits or gets a very generous VRS benchmarked on that. How much of that benefit will actually cut into the proceeds from privatization? Is it doable?
I think it's doable because you see, as of today, what do I technically get under the laws? I get 15 days salary.
Right.
There has been a proposal of 45 days. If you make it 45 days, I think the resistance on the part of trade unions is much more imagined than real.
Right.
The resistance is really from the political classes, by which I mean members of parliament.
Right. Okay. So you're saying that economically it's something which is doable.
It's doable.
Yeah. I just want to bring Manish into this very quickly, and then we'll go across to Dheeraj.
Raghav, this is the heart of the government debate, that is it the government's job to be a landlord which is sitting on assets and paying away 50% of its revenue collections every year by way of interest, instead of using money to create new assets and take risk to revive the whole investment cycle. I find it extraordinary that in this country the government sits on as a shareholder of ITC instead of trying and building ports and dams for the country. I find it extraordinary that 60 years after independence we are sitting on Steel Authority of India, or 10 years after they had decided to sell away Hindustan Zinc and VSNL and others like that, the government hasn't got its act together to just get this free money which is sitting waiting to be picked up. So this has to be done like in day one when the Prime Minister takes over.
Right. Okay, Dheeraj, day one, getting him to order privatization is going to be a tough ask. Take that point and then add on to our other point of remove FDI caps.
Well, Raghav, I mean, the question you have to ask is, should the government be running airlines? Should the government be running hotels, when it's amply clear that the private sector does a good job of it, a much better job than government? Now, instead of sinking thousands of crores into Air India every year, every 5 years, why not just sell it off and let a private player run it?
We almost sold it off.
And in Air India's case, I don't think they're poor unions or poor workers. They're extremely well-paid pilots and extremely well-paid staff. So I think that's certainly something which, and the logic of it is just that the Civil Aviation Minister and the Ministry will not want to give it away because it's a big source of patronage. So I think that is something the Prime Minister must appoint a Civil Aviation Minister who will do this.
Right.
That's a very important, so appointments to key ministries where PSUs are held is very important for the next Prime Minister, must be done. As far as FDI caps are concerned, it's a no-brainer. I mean, really, we should now get over the old mentality of fear of the foreign investor. We are ready for competition. India has shown it. Our companies are everywhere in the world. And all FDI caps do is encourage a growth of a certain crony entrepreneurial class in India, which mandated by policy gets a share in what is a foreign business.
Okay, so here is point number 5, which Dheeraj has just alluded to, which is remove FDI caps across the board, we are saying. So in India today, we have a very curious situation. You have some sectors which get 20%, some which get 26, some which get 35, some which get 49, some which get 70, some which get 65. It's unreal the kind of caps that we have across. So we are coming up with a recommendation which says you really just need 2 levels. One is 49.9%, where you don't want majority foreign ownership, or 74%, where you say that I don't want 100% foreign ownership, but against that I will give only 74%. And we have said even in something as strategic as defense, you should allow 74% foreign investment. Is this too aggressive or is it doable?
I would go much more aggressive. In fact, I would.
Can the Prime Minister do that?
Well, he should. I mean, because nowhere where we have increased FDI, where we have removed FDI caps, I mean, the software industry, we, in ab initio in 91, 92, we allowed 100% ownership in software and services. I mean,
there are several examples. Look at your auto industry. You've got a Tata Motors which has gone and bought Jaguar, and we are competing with the rest of the world.
Why are we so frightened about this? We are not frightened, but we are frightened about losing the revenue to fund the political business model, which comes from what I call quote unquote entrepreneurs, people who lend their name to
rent-seeking entrepreneurs.
Rent-seeking entrepreneurs. So basically what I would suggest is that you have an open sector and you have a clearance sector. Let's give up this ghost of case by suitcase business of clearing proposals.
Automatic approval.
And then this is a go section and this is a no-go section.
Well, these sound radical, but this is something that if the Prime Minister can muster up and I won't even call it courage, I would call it political gumption. If he can muster that up and get it done, this is something that could actually really get the investment cycle restarted in the economy. You stay right there, go to our website thinkindia.in.com, contribute your thought, and we'll be right back. Welcome back to Change India, an agenda for the next Prime Minister, and today we are talking about how to get the investment kick going in the economy. And point number 6 on our agenda for the next Prime Minister is something that again has been spoken about for possibly a decade now and not done, which is bring competition in banking, more competition. Some has come in, but much more. But the point that hasn't been done is really deepen and develop your bond market. So I'm going to pick that second part of the point and go straight to Manish. Manish, we've talked about it. What is holding up the development of the bond market, and how can the new Prime Minister, when he comes in, get it done?
There is a fundamental issue in India that we save, say, about $600 billion a year, but half of it is still not coming into the financial markets. It's still going into hard assets, where people are physically buying real estate or they're physically buying gold. And I think what the message simply seems to be that we don't trust the financial instruments that this government creates. We don't trust our currency, and therefore we look for stores of value. So the ideas of things like bringing in inflation-linked bonds, the ideas of getting banking deeper into India, the idea of trying to make gold a monetizable instrument, the idea of making real estate a lot more transparent, these are ideas which will have to get concretized and taken forward. And also, unless you create longer term pools of capital, you aren't going to develop a bond market because you can't be running on 12-month and 24-month money
but what is
in the bond markets as well.
But what is holding us back from doing that, Manish? What is holding us back from having 10-year bonds, 15-year bonds?
We don't create instruments which get people to save on that basis, because everyone in our country seems to be thinking about 12 months and 36 months as the definition of long term. So completely forget about 10 years and 20 years. And the way to crack it would have been, apart from LIC, which seems to be the only pool, is to create a pension culture in the country where people do this forced saving, like you have in Singapore. You've also got it in Chile and countries like that. And that also doesn't just solve the bond market, but also solves a source of long-term domestic equity market getting developed.
Right.
Because frankly, the risk capital domestically isn't available.
Okay, let me, Saugata, come to you on the bond market as well as competition in banking. We've said give many more licenses than you are giving, get many more banks in, allow a lot of mergers and acquisitions, a lot of consolidation, and let's get some public sector banks also to become larger. India doesn't have really large banks. We've got very small, tiny banks. So what needs to be done here?
I think this is one area, frankly, where I think we are far, far more advanced than in the other areas. I think steps are actually being taken now in the banking sector, definitely. I'm not very sure of the desirability of this huge big bang, 13 banks coming in together. I think this has the potential to create disruption in the sector. But what is now emerging with this new structure that is being thought, different types of banks, some large investment banks, some large universal banks, banks with enough scale to compete in the global markets, etc., etc. The process of continuous licensing. So it's not just issuing licenses.
That's what we've said. You should not have a window which opens and closes. Keep it open.
Keep it open, absolutely. Keep it open. As and when any suitable, appropriate candidate comes in, give him a license. So that's done. In terms of the bond markets, again, you come back to your basic question on your fiscal deficits and etc. The problem with developing a bond market is we do not have a good benchmark sovereign yield curve. Because without that curve, you will not be able to develop, because there is nothing to benchmark your...
So how do we get that done quickly?
Fiscal deficit, again.
Fine, so we are back to the macros.
Back to the macros.
Repair your macros and everything is okay. Dheeraj, quick summary.
I think a lot of this stuff is difficult to get done, but it should be done. And I think, as you said, a lot of this has been debated for a very long time. And I think, I mean, as the panelists have said, it's very easy. I mean, banking licenses is one thing which is very, very easy. There's absolutely no reason to open it once in a decade. I mean, this should be done on a regular basis. There are all kinds of debates whether corporate should be allowed, whether these people... Let it be open for everyone. Pick candidates on merit. Let's get competition in. Let's privatize some public sector banks.
Smaller public sector banks.
Absolutely no need for banking to be necessarily in the public sector. Those days are gone. So there are lots of options, lots of things which can be done by the next Prime Minister.
Right. Okay, now we've got points number 7 and 8. You can't argue too much about it, so I'm going to read these out to you, but then bring in a bit of the audience reactions. Point number 7 is decentralize approvals. Allow a single window at the state level. Now, this is something that should be just done. I don't think anyone can really have anything against it. And the 8th point is also something which should be just done, because it's all about transparency. Digitize processes related to registration and clearances. Have time-bound clearances. Have everything on a website, so the journey of an application through the government system can be easily tracked. So points 7 and 8 are really not up for debate. They should be just done. So I'm going to get the audience in with something which is on their mind. Yes.
I have a question, like how can this be done, like this whole e-governance thing like we are talking about, without having a good cyber law? Like this IT Act that we have is too vague to implement.
I think that's a very good contribution. So on the agenda of the Prime Minister should be to get a nice modern cyber law done. And then all of these e-governance issues can come in. There was someone raising their hand there. Yes.
Sir, as India is known as a country of parallel economies, and there in every street and every mohallas, there are many persons who are into financial business. They normally lend money and finance the persons. Then why not government is having some laws or some products like that, so that the fund that is into parallel economy can come into the products?
Absolutely, no question about that. I think that.
But secondly, I want to add something.
Yes.
Say, as far as inflation issue was there, then again government tried to that ban gold import. In that case, they have introduced that inflation index bonds.
Yes.
But in that case, the performance was of inflation index bonds.
It hasn't done so well because the returns are still not being seen as attractive. Let me go across to Manish now. Manish, we are running a bit out of time here. You've heard the debate amongst all our experts and our audience. Give us a quick summary of this segment and then we'll get on.
Raghav, quickly, the point I wanted to make was this, that when we use words like approvals and clearances, we still run with a mindset that the government is a lord which is going to hand out something rather than a facilitator of business. So if you want to change behavior over here, just opening a single window won't do.
Okay.
And this is the single most debilitating fact for any entrepreneur, that he feels like a beggar each time he goes out. I think the opposite must also apply, that whether it's the Prime Minister, the Chief Minister, the District Collector, right down to every level, they must put out details of how much investment have they attracted in their tenure,
right?
How much jobs did they create in their tenure,
right?
How quickly did they approve any application which was put forward,
right?
And reasons for delay, So there is a opposing pressure as well on the administration.
That's
as servants of society rather than people who are granting out largesse.
Okay, so that's an interesting value addition to our point on decentralized approvals allow a single window. You're saying actually put performance benchmarks of individual performers, people who are supposed to deliver on a website. So we benchmark that as well. That's a good thought. You stay right there, get onto our website thinkindia.in.com, give your thoughts, and we'll be back after a very short break. Welcome back to Change India, an agenda for the next Prime Minister, and today we are talking about how to revive investment. We are on to point number 9, which is a critical point. Revisit public-private partnership and try and reform and get rid of the mess that has been created in that sector. Manish, I'll come to you. How to reduce corruption, how to get the stalled ones going, and how to ensure that the next ones that come up are working to a correct template.
Well, difficult area because it's as you know, the government should be taking the primary risk of setting up large infrastructure projects by vacating the public sector which they own. As in, you develop something, sell it, and let someone else operate it. Whereas here what seems to be happening is, as you realize, you're in a way creating quasi-monopolies or annuities. These are being in a way handed over to people to create these monopolies. That was at least the theory 5 years ago. In practice, what has happened is all the risk has passed on to the private sector. Any delay, any regulatory logjams has meant that these companies have collapsed, or these SPVs have collapsed, and they don't find investors anymore. And because now you still want to protect their interests, these aren't put up for re-auction or for refinancing, or the government doesn't bear part of the losses. And unless we get all this sorted out in the manner I've just described,
right,
you don't have a hope in hell of getting this revived in a hurry.
And this is a critical sector. Saugata, for instance, we've just had the instance of the Gurgaon toll road now coming back to the government because the private operator simply could not deliver. So how do we get PPP reformed, public-private partnerships?
Partnerships. So, I mean, one of the things is that obviously, I mean, you need to get the market structures in which these private PPPs operate very, very right. So, as much competition in any segment. So, you shouldn't try to have a large PPP across the board. So, try to figure out segments. In Gurgaon, of course, I mean, the roads are PPP, so you have to have mechanisms by which these PPPs become contestable. That is to say, exactly as you were saying, re-auction them.
Yes, wherever they've run into trouble, we are saying it should be a part of the contract that in about 2 to 3 years, if this project has run into trouble, don't try and reform, put it up for re-auction.
That's exactly it. And then if it gets into trouble, we are sitting in Delhi, the Delhi Power Discom, say for instance, this has been tried in California. I mean, there are ways in which you look at stranded costs. These things are called stranded costs. So right, you want to put in a actual transparent proper price through which that stranded cost can be recovered.
Right. Okay. So this is a nitty-gritty thing for the new Prime Minister, but something he'll just simply have to get done because there's too much capital and energy lying locked in this sector. Last point for the Prime Minister, and a big one, reform labour laws, because this is something which comes in the way of everything. What we've suggested something very practical, and I'd then like to take it to our experts. We've said, if you try and reform it for the people who are currently in the labour force, you will have endless debates, endless agitation. So people who are currently in the labour force, leave them exactly as they are under the old law. But for new people who are getting employed in the economy, bring a new law. This is technically called grandfathering. Just grandfather the existing people under the old law and bring in a new law. Bibek.
Quickly on the grandfathering, someone might very well go to court under Article 14, but I think it's tenable because we've done something similar for pensions. But on labour laws, 3 very quick points, because I think we need to approach it at 3 different layers. The ideal one would be to change the 7th schedule and move labour away from the concurrent list to the state list so that states can do what they want. Amending the 7th schedule is going to take time. So the second way is, if you look at what are the contentious elements of labour laws, they concern essentially industrial relations, Industrial Disputes Act, Contract Labour Act and the Trade Unions Act. The rest of it, there is no great resistance to unifying and harmonizing. And the final point I want to make is, even on the Industrial Disputes Act, Chapter 5B of the Industrial Disputes Act, the resistance is much more for closure, and we can therefore unbundle the closure part from the layoff and the retrenchment part. One of the reasons why we haven't been able to get labour market reforms going is because we have regarded it as an integral whole. Instead, we need to chop it up into different segments.
And bring in smaller reforms in smaller areas. Shankkar.
Quickly, I think that it's worthwhile investing the energy in getting the 7th schedule done and move the things to the state governments. Let states decide on labor laws because they are finally the ones who are implementing the laws.
Right.
What the center should do is codify welfare and leave it at that. Be the sort of chief priest and let the parish take over.
Currently, it's on the concurrent list, is
yeah,
it?
so it should move to the state list.
Move to the state list.
And the third thing is that infinitely we see that the labor laws we currently have led to more job losses than job creation. So I think that we must
But
bring
that is
it
something. That
politically, if we sell it as a job creation, for every time we put in a law and we guarantee we will create so many jobs by this. We are the only country where 90% plus are in the unorganized sector.
That's right. Now this is, Dheeraj, to wrap it up for us, what Shankkar was talking about and what Bibek actually has written a bit about, and I've read that, is this, what you think you are trying to do is protect labor. Actually you are not. Actually you are acting against employability when you have these rigid labor laws. People don't quite understand that.
I mean, Raghav, at the end of the day, what is this about? What is investment about? What is growth about? It's about creating jobs. If you don't create jobs for the people, all these things are mere statistics which have no meaning. So, I mean, one interesting statistic is that in 20 years of liberalization, the percentage of the workforce in the organized sector hasn't really gone up. It's still around 8 to 10%. So, in 20 years of all that, we still have only a very small organized labor force.
That's because you made it so rigid.
So that is why labor laws need to change, because we need people to have faith in the market economy. We need people to believe that the market economy can deliver jobs. And the market economy would deliver jobs if it wasn't for this old socialist labor laws. That's one point. And quickly on the PPP, that's another important point. It needs to be revisited because that's again about people's faith in the market economy. I think crony capitalism is destructive. It destroys people's faith in the functioning of the market economy. So we must evolve a system where these can be revisited, re-auctioned, so that people believe that markets work, and that's the other efficient way. That is the way India can prosper, and we need to just reignite that faith. And the Prime Minister has to reignite that faith.
And the Prime Minister is the one person who can if he wants to. So we've spent 1 hour trying to tell the Prime Minister to take 10 steps and get the investment restarted in our economy. Let's hope when he gets into office or she gets into office, they can get it done. Thank you very much for being with us today, for being such a wonderful audience. Stay with us in this series. We'll be back with more agenda items. For now, have a look at all the 10 points that we've suggested to the Prime Minister today.